Hey Visionaires, I'm talking to you, Vision Rich entrepreneurs. I know you guys want to be more than just Vision Rich. You want to be rich. And the first way to get there with your business is you got to raise money for your business. I know that a lot of you are bootstrapping it. That means that you are making some sales, generating some revenue from those sales, right? Putting it right back into the business. But if you actually want to scale your business, if you want to do it quicker, faster, it really helps to have outside sources of capital to make that happen. Whether that's grants, whether that is loans, or whether that's what I'm talking about today, investors. Okay, so there's a couple different ways. I mean, there's a lot of different ways that investors can invest in your business, and there's many different types of investors. But the key ones that you'll hear a lot about are angel investors. Just really wealthy individuals who, have reached a federal definition, actually, of wealth, such that they're able to invest in your business. Then you have, everybody's heard about it, the venture capital firms, or maybe you haven't heard about venture capital firms. That's because they don't invest, by and large, in the majority of businesses that are out there, okay? But venture capital firms, think of it as a collection of really wealthy individuals and then people that manage that money and invest it in businesses, and everybody gets a great return for their money. Okay, then you have family offices and private equity. So those are the main ways in which you can get investment dollars for your business. Now, what do investors care about? No matter which way you're talking, angel investors, venture capital, private equity, it doesn't matter which you're talking about. I'll tell you one thing for sure. They all want a return on that investment. One of the biggest mistakes I see entrepreneurs doing when they're going after investors is not being clear about, well, what's the return on the investment? They're not just putting their money into your business so it can sit. Okay, it's not a savings account for their money. It's a very terrible savings account at that, for their money. They want to put their money in your business. They want to see their money grow, and then they want to get their money back out of your business. Now, in some very rare cases, they might come along, some types of angel investors come along and say, hey, I want to be with you for the lifetime of this company in terms of decades from now. But that's very rare. Most investors are doing a short-term deal here. They want to put it in, they want to see it scale quickly, get a certain X return on that money, and pull it back out. So know what the return on investment is that they want. If you have an investor that you're going after, let's say a venture capital firm, and you think you're going to get a venture capital firm by saying, I'm going to make $200,000 in revenue in the next 3 years, and then we're going to, maybe scale by 5 or 6% every year after that, and I plan on keeping this business in my family. They are not interested in hearing any of that. Number one, your revenue is way too small for them, okay? They're invest $1 million into you and you're only ever going to make $200,000. There's nowhere for them to go. Invest $100 million into you and you're only ever going to make $5, $10 million, $20 million. There's no room for them to actually increase, right? There's no exponential rate of return, but X factor of return that they can get on that money and actually capture something back from their investment, a return on their investment. So think about the size of your company when you're thinking about the size of the investment amount that you're asking from the investor. And when I say size, I mean the end game size. How much money do you hope to make when you're quote unquote successful, when they can quote unquote cash in and get their money back out is super, super key. The next thing is, what are the types of businesses they want to invest in? Investors have a type. Okay, I've said this before with other money aspects. They always have a type. Just like dating, right? They may not tell you their type, okay? Some cases they try to because they don't waste their time anyway, right? But there are some times when they might actually come out and tell you their type. So how do you figure out their type? Just go to their company website. If they're an angel investor, ask around, ask them, what other types of companies have you invested in? Tell me about your previous investment deals. And if they've only ever invested in cookie companies and you're coming up as a sneaker company, they're likely not going to invest in you, all right? They must have a thing for cookie companies. All right, that's just a silly example. But for example, if you're not a tech company and you're going to a venture capital firm that only invests in financial tech companies, and you're not even in tech, period, okay, you're way outside of what they're ever going to invest in. And you're not even in finance, financial tech, we call fintech, well, you're still outside of what they want. So don't waste your time trying to date investors that aren't trying to date you. Go out there and find a different investment firm that you can apply to, different investor that you can woo that actually is interested in providing money to your business, both in the type of business you do, as well as the size of business that you're planning to grow to in terms of revenue. The last thing I'll say about investors is they got to get their money back out of your business. Okay, we're going to talk now about venture capital firms. They're putting their money in. They're here for a good time, not a long time. All right. So they want to put their money in. They need to get it back out. That means you need to exit the business. Now, you can exit the business by being sold to another business, a larger one. Okay, you could also go public with the business. Okay, but IPOs are pretty rare. That's when you go public and you go start trading on the stock exchange, right? The stock market. It happens, but it's rare. So usually you're talking about, I'm going to sell this company to somebody larger in X number of years, usually 3 to 5 years. So if you're coming to an investor, they don't want their money to stay in your company forever. They want to get it out with a high rate of return. They want to know the plan of how you plan on exiting the company. What's going to be the trigger for them cashing out? So they always want to cash out. So keep that in mind. If you are a lifestyle business, if you are a business that I want to keep this in my family and we don't want to cash out and sell out to anybody, then you are not gonna be the ideal company for an investor that's looking to cash out. And most are looking to cash out, especially when you start talking about large sums of monies in the millions being invested into your business. So keep that in mind about investors. Definitely check into investors. Don't be afraid of them. If you need any help figuring out investors, if you have any investor deals you're looking at, or you're just curious about who's out there that I could actually apply to or woo or try to attract, reach out to Visionarium, www.visionarium.com, and we can help you with that funding need. As always, stay vision rich, and don't forget about the investors. They're cool people too. Talk to you guys.